Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, it's been a tough stretch for job seekers, but are we hitting bottom? And the future of electric vehicles in Canada is very much up for debate. What's at stake? Plus, moving fast on big projects might mean different things to different people. That's all ahead. First, for the week that was in business, it's time for the briefs. A deadline for new tariffs has been pushed to August 1st by U.S. President Trump as the July 9th date for renegotiated deals comes and goes. Trump sent letters to 14 countries warning of new tariffs coming, including a 25 to 40% tax on products from Japan and South Korea. Canada is still negotiating a trade agreement with the U.S., while high tariffs remain in place for steel and aluminum. Separately, Trump suggested new tariffs of 50% could be applied to copper, which sent copper prices in the U.S. to record highs. Copper is a key industrial metal for electronics, wiring, and power generation, and is an essential component of new technologies, including solar and EVs. The U.S. imports 17% of its copper from Canada.
We're going to be announcing pharmaceuticals, chips, and various couple of other things, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Why don't you announce copper?
And we did cars. And now, today, we're doing copper.
The federal government is looking to downsize in a big way. Finance Minister François-Philippe Champagne has asked departments to find billions of cuts in order to reduce program spending by 7.5% next year, 2.5% the following, and 5% in fiscal 28-29, for a total of 15%. It's expected that the first wave of cuts could show up in the federal budget this fall. Affordability continues to improve in Canada's rental market, with rents either falling or growing at dramatically slower rates across Canada's largest cities. CMHC reported that the completion of new rentals remains above the 10-year historical average, mostly driven by government initiatives. Canada's Competition Bureau is investigating Amazon in Canada to determine if the online retailer abuses its dominance by enforcing prices for sellers. The focus is on the Amazon Marketplace fair pricing policy. It penalizes sellers if they list an item at a price that's higher than is listed elsewhere, including on the product's own site. And those are your business briefs. It's been a tough stretch for job seekers, especially younger ones looking for summer or first jobs. But could the worst be over soon? Claire Fan is a senior economist at RBC. Claire, thanks for being with us.
Thanks for having me, Amanda.
It's definitely been hard, and we've seen, obviously, the unemployment data, the unemployment rate ticking up. First time, we know young job seekers are having a hard time. Is there any reason to think we might be seeing the bottom of this trend, that things might get better, say, in the next few months?
Yes, so we are cautiously hopeful. We're optimistic about sort of the future of the Canadian labor market and think that the bottom may be close to us. But like you said, obviously there has been tremendous softening that we've seen already this year. I mean, we've seen significant job losses. It's not just younger workers that are entering the labor market. We're seeing employed workers are now losing their jobs, right? But the weakness is so far relatively contained, and that's one thing we've been highlighted, which is devastating, obviously, for the manufacturing sector that's particularly exposed to a lot of the international trade headwinds. But both geographically and from an industrial or sectorial perspective, the bleed has been relatively contained.
And just on that front, the job losses we've seen, as you say, I mean, we've seen plant closures in manufacturing, lines that aren't going to be built or that are being delayed. Is a lot of what we've seen in the kind of those big numbers related to trade? So if we get resolution, maybe we get some of those jobs back, in fact.
Yeah, 100%. I think when it comes to sort of the impact of, broadly the trade war and this having on the Canadian economy is really twofold. So number one, we have the most direct impact directly towards, and this is essentially where the job losses we've seen are most acute. So manufacturing, since January, this industry or the sector has lost over 55,000 jobs, which is the equivalent of 5% of the workforce. And we've seen, the unemployment rate is unsurprising that it's significantly significantly higher than the national average in Southern Ontario, for example, Peterborough, Windsor, as well as Toronto as well, and Quebec, where, the manufacturing accounts for a larger share of the workforce, essentially. But yeah, essentially, I think moving forward, and this is something that we've been highlighting as well, which it comes off as a surprise to a lot of people, Canada is actually relatively well positioned when it comes to competition in the U.S. import market. And the reason for that is a lot of the goods, we counted 91% of Canadian goods, were still accessing the U.S. market duties free because of CUSMA exemptions.
And that, which of course makes getting our trade deal renegotiated and firmly in place all more important. In terms of the people that have lost jobs, I mean, often, Clara, when we see big job losses, we worry about recession following because, of course, that impacts people's ability to spend, especially discretionary spending. We haven't really seen that. We've seen obviously a slowdown. Do you expect to see kind of a delayed reaction to some of those job losses, and that will show up in the economy?
Yeah, so that's sort of the key question that we're getting at here, which is, okay, we're seeing job losses at places where spots that we think we're expecting them to show up. To what extent is this going to spread or bleed into some of the other sectors that are, you think might be more insulated from a lot of the trade headwinds? And so far, we're seeing very limited evidence that it's spreading, which is also the other reason that we think the bottom may be near.
And of course, if we do see that spread, that can have a real ripple effect. I guess it comes down to how quickly we get resolution, right? And we can get things sort of back to normal. What about supports for the people that have lost their jobs? Are there enough supports in place for, say, auto workers that it insulates the economy a little bit?
Yeah, I think broadly, again, if you were to look at specifics of the counter-tariffs and the exemptions that are associated, a lot of the exemptions, especially with the auto sector, was really put forward with the aim to keep manufacturing in Canada, to make sure that the plants, continue to hire workers. So from that regard, I would say from the counter-tariffs perspective, the government has put in a lot of consideration just to make sure that, we're not doing this at the cost of Canadian producers.
So good to have you for this, Claire. Appreciate your time.
Thanks.
Claire Fan is a senior economist at RBC. Coming up, electric vehicles are still a big chunk of new car sales, but can we hit ambitious targets? Stay with us. Welcome back. Canada's electric vehicle mandates are under scrutiny. Here's where EVs stack up around the world by the numbers. Last year, 17 million electric vehicles were sold globally, or more than 20% of the total. China is the runaway leader. Almost half of its car sales in 2024 were electric, more than 11 million last year alone. 1 in 10 cars on China's roads are now electric. In Canada, EVs are about 17% of the total, with 252,000 sold in 2024. Current federal mandates require 20% by 2026, rising to 100% in 10 years. Emerging markets in Asia and Latin America are taking off, with EV sales jumping 60% last year to more than 600,000. 75% of EVs in those markets come from China. China's dominance now means that 70% of global EV production is Chinese. And Chinese EVs are cheaper than conventional cars, unlike in the U.S., where EVs are 30% more expensive. One big advantage for China is control of the battery supply chain. Battery prices in that market fell 30% last year. That compares to 10 to 15% declines in North America and Europe. As for how we are doing on hitting our targets, recent Canadian data suggests EV sales were just 7.8% of the total in April. So how adaptable is Canada's auto industry when it comes to electric and conventional vehicles? Flavio Volpe is president of the Automotive Parts Manufacturers Association. Thanks for being with us.
Thanks for having me.
So let's start with the EV mandates. We know there was a meeting. The question is, can we hit those targets? When do we hit those targets? How flexible do you think either side is on this question right now?
I think it was a good meeting. There's been a series of meetings. I think the government understands that while we need to be committed to electrification and that it does play to Canada's strengths, both in the supply chain and the eventual battery supply chain, today we're not going to achieve those 20% target for 2026. The companies that sell cars here, and especially the companies that make cars here, are committed to those vehicles. Achieving that target is a function of consumers buying them, and consumer demand on them have chilled. It's likely for the interim, and your numbers and the global numbers suggest that we are on a march that will not be stopped. In the interim, though, if we don't readjust those targets. Every unit that companies that manufacture cars here and sell cars here short requires them to invest $20,000 in a charging infrastructure that can be used by any customer, or buy a credit against that's been generated by companies like Tesla or VinFast, who don't manufacture cars here, who don't have Canadian content, who don't employ Canadian manufacturing employees. The numbers are stark. If you fall 30,000 units short because you sell 300,000 units here, but you make 300,000 units here, you have a $600 million penalty. I think the government understands that now's the wrong time to punish those companies, especially the ones that are employers here. Then those companies continue to commit to that product line. Hopefully a lot of this, after the Trump chill goes away, is made here in Canada as intended.
So let's talk about that for a second, because, of course, with those 100% targets, which really was an aggressive commitment to making a change, we would all be buying cars like that in 10 years because that's all we could get. With it came massive investments in the infrastructure, right? We saw billions of government dollars pledged to companies to bring the supply chain here, make batteries here. We're seeing that all drift away as well. Is all of this now delayed and it's going to be kind of status quo, if we can even call it that, Flavio, given what's going on with the trade relationship with the U.S.?
Sure. I think we're all being generous on what the chances were of getting to 100% by 2035. When we first announced that total, I said impossible. You know, in I'm as devoted to the electrified supply chain in Canada as anybody. And in making those deals with those automakers that you talked about, tens of billions of dollars, those deals were production subsidies. Look, commit to the product here, commit to the batteries here. We're going to match the IRA in the U.S. to keep Canada competitive for those investments. And if you make those, the government would flow you back the amount that would have matched the tax credit in the U.S. So we're not on the hook for those tens of billions because those aren't being made. But it's a shame that when all that effort to get all that attention to make all those future commitments here in Canada, we ran into the second Trump presidency. Right. 84% of the vehicles that we make here in Canada get sold to an American consumer. So all of those car companies are right now in a moment of unprecedented flux where the law doesn't matter, only leverage. And that's not a time to punish them.
So in terms of where we do go from here, one of the big questions, of course, is going to be how we negotiate a new trade agreement that reflects sort of what the U.S. seems to want while protecting our industry. What's your insight right now in our progress on that front? Will we have a healthy auto industry in this country on the other side of that deal?
I don't know where we're going to end. I do know that there is enough of the right people who are charged officially to bind the two countries that are speaking on an agreement that goes that hopefully goes on July 21st. What we want is a lifting of the sectoral tariffs in automotive, steel, and aluminum. What they want is something in return that they don't have. That might be some of the critical minerals that are important in this space. It might mean access to the safe source of oil and gas from Canada. We just don't know because a lot of this is on the president's whim as he balances other relationships.
Flavio, great to have you. Always appreciate your time.
Always a pleasure. Thank you, Amanda.
Flavio Volpe is president of the Automotive Parts Manufacturers Association. A big part of the push to EVs was to help set up the battery supply chain here, and that includes, of course, the development of new critical minerals. So what happens if we take our foot off the pedal to EVs? Sean DeVries is executive director of the Battery Metals Association of Canada. Thanks for being with us.
Thank you.
So let's start with kind of your view of this path to electric vehicles. How much does that matter to those that are producing the metals for batteries?
Electric vehicles is obviously a major part of going forward in terms of the energy transition, and it's going to be a big component of where these battery metals go into. So, very significant portion.
There obviously, Sean, there's a ton of talk about critical minerals and developing not just the ones we already produce in this country, but new ones. How much scope do we have for that in terms of the critical minerals we need to secure a supply chain whenever that future does come, whenever we do make the full transition to EVs?
Yeah, well, and I think it goes beyond EVs. This is energy transition in general. And so there's a lot of critical minerals that we need. Luckily, Canada has abundant supplies of these critical minerals. So The challenge really now is getting those out of the ground, getting them processed into these energy metals that we talk about. So that's really the stage that we're at. We're taking a look at how do we get them from the ground into those materials? And that's the step that Canada is really missing right now, is that materials processing to get them into that form.
And of course, we've seen a renewed push to do this. Are you optimistic that A, will get some of the projects done that have been in the works for decades, but then B, to your point, add on things like downstream processing that we haven't done as much of in Canada as we might?
Yeah, absolutely. There's a lot already underway, which is the positive thing. And so those projects just need to move forward. But there's a lot of other opportunity that we have. And really, that's what we're looking at. How do we start to build beyond individual projects, look at industry clusters? How can one investment help support additional investments? And that's really the way that we see this moving forward and being able to benefit from multiple opportunities as we make these investments and developments.
I assume you're finding kind of a new willingness by governments, federal and provincial, to listen to those arguments these days.
Yeah, absolutely. I mean, this is the positive thing, is we now have all stakeholders at the table. We've got to figure out what our best opportunities are and start to prioritize some of those so we can put them to action. We're talking about things like approvals processes and streamlining those to make sure that we can move projects through forward. Our faster part of me, we also need the funding. And so those are areas that industry is working closely with government on.
Are you skeptical about some of the roadblocks that have been in place now for a long time that have made projects slow to move?
No, I don't think so. I think, again, we've really seen the opportunity here and the need to move this forward. And so it's really about breaking down those barriers and those obstacles now, trying to move forward in ways that we can actually take action on these things. Really, as a nation, this is providing us a great opportunity, but also securing economic and energy security for us as well.
So good to have you for this, Sean. Really appreciate your time.
Thank you.
Sean DeVries is Executive Director of the Battery Metals Association of Canada. Coming up, how are restaurants managing this summer? We'll get a close-up view with the franchisor of dozens of brands. That's still ahead. But first, a Canadian icon is no more. Mondelez Canada, you used to call them Kraft, is discontinuing the Jersey Milk chocolate bar, apparently for lack of demand. You wouldn't know it from the sudden outpouring of love for the bar that was only ever made in Canada, which apparently melts just right for s'mores. Maybe it's part of a bigger trend where Ozempic is winning and sugary treats are losing. But after 101 years, it's a bittersweet goodbye, Jersey Milk. We didn't even know we would miss you. We're back after this. Food prices are still at elevated levels, but traffic in most urban centers has not returned to pre-pandemic levels, so small restaurants still face some challenges. Peter Mamis is CEO of Foodtastic, which operates franchises of dozens of well-known brands, from Milestones to Second Cup. Peter, thanks for being with us.
No, thank you for having me.
Let's start with a read on the health of the business, because you have this frontline view of so many different factors. How are the restaurants doing overall?
Restaurants are pretty resilient. I mean, our traffic is down, and we're facing a lot of headwinds in tariff inflation. But overall, I think the industry is working through these.
We definitely, I mean, the range of brands in your portfolio is pretty wide. Are you seeing a difference between different types of restaurants? From you've got the quick serve, you've got sit down restaurants. Which ones are actually faring better right now?
Yeah, so at the beginning of the year, it was more the quick service that was doing better. I figure in the last 8 weeks, with the patios opening up, the full service restaurants have eclipsed that, and they're starting to post some positive same-store sales numbers. So we're kind of excited about that.
You are a business that actually acquires other businesses, Second Cup being one of the most well-known Canadian brands, but you've also got hosts of others in your portfolio, including Freshie. Is it fair to say that when you're kind of acquiring that brand, it might be because it's run into some trouble? What do you see in the brands that's different than what the previous owners were working with?
Yeah, that's a good point. So we look for brands that we think we could improve, whether it's the food or the service. And I think Second Cup and Milestones are two great examples of that. When we took over Second Cup, it was in a decade of decline. We took it over. We fixed the food portion. We We made our beverages more premium and a little bit better quality. And on top of that, we rebranded Second Cup completely. And we've stopped the decline of stores, and we're actually opening 20 new locations now every year. And Milestones is the same kind of success story in the sense that it was also in a decline. And we actually remodeled it. We fixed the menu. We changed all our marketing. We brought the brand to Quebec and to Nova Scotia. And we're opening some new stores in Coquitlam and in Whistler.
One of the challenges in this whole space has been on the labor side, certainly through pandemic. That was a massive challenge. Have you worked through that? We've heard a lot about young people not being able to find work. Can they find them in your restaurants?
Yeah, they can. I think what happened also is you heard a lot of that a few weeks ago, but the weather didn't help that situation. So usually we bring a lot of students in, especially when our patios open, because if you look at our full service restaurants, we're probably increasing capacity by about 30% during the patio season. But we had such a bad spring and the beginning of the summer that it was really cold, so we didn't really go on that hiring spree. Right now we're at full staff, so we've opened up a lot of spots for these students.
That is good news. Peter, so good to have you for this. Appreciate your time today.
Thank you so much.
Peter Mamas is CEO of Foodtastic. Time for the takeaway and moving fast and breaking things. Canada's federal government is committed to big projects. How do we know? Well, because they've told us so. Meetings with the provinces so far have been aimed at making lists of priority projects, and the recently passed Bill C-5, or the One Canadian Economy Act, is the tool the feds will use to get things done. Those things might include new pipelines or other big infrastructure projects, from ports to electricity transmission, new clean energy initiatives, or Arctic infrastructure. We'll hear soon what the first priorities will be, but we've already heard some of the objections to the sweeping powers of Bill C-5, most loudly from Indigenous and climate groups who worry that speed will trump other concerns. There's no doubt that speed is part of the point here. Canada has vast resources it could have been developing for years, including conventional oil and gas, as well as newer resources like critical minerals. Now those projects will be sped up, streamlining processes that have made waits of many years the standard and arguably made the projects less attractive to investors. Part of that time was spent in consultation with groups that include local communities, environmental agencies, and of course, First Nations. The question ahead is how Canada will combine speed and efficiency with those consultations. After all, this isn't China, where massive infrastructure projects spring up seemingly overnight. Canada has a robust legal framework when it comes to the rights of First Nations here. Squaring this circle may well be the most complex task the federal government faces. How it does it may define the culture it plans to advance. Will it be one of inclusion with all of its messy, lurching progress? Or will it be one of authority, where the central power in Ottawa makes the call and the rest of us toe the line? There are arguments to be made for both. My takeaway? Moving fast can mean breaking things, but it works when you move fast on your failures too, and then move on to the solution. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.